Hello everyone, a lot of talk today about what happened near the White House and whether this was just another dangerous street-level incident or something that could turn into a much bigger national story. So in this video, we're going to separate what is confirmed from what is still speculation, and you are going to walk away with a clearer understanding of why gold, silver, and the broader markets may pay attention even before investigators give the final answer. Today is Tuesday, May 5th, New York time. And before we go any further, comment what day and date you're watching from, because with a story like this, the timing is not just a detail, it is part of the story. And one quick thing before we get into the facts. If you value my content and you want to support the original work, subscribe and comment John A.G. Best. That helps separate the real analysis from the copycat noise. So in case you haven't heard the details yet, here is the basic outline. Secret Service personnel confronted an armed, suspicious individual near the National Mall in the area close to the Washington Monument and not far from the White House. The person reportedly ran, fired at officers returned fire, the suspect was hit and taken to a hospital, and a juvenile bystander was also struck by the suspect but was not reported to have life-threatening injuries. Now right there, we have to slow down. Because the internet wants a label immediately. It wants to say, this was definitely an assassination attempt, or this was definitely nothing. And honestly, both of those answers are too fast. The known facts tell us this was a serious security event near one of the most protected political zones in America. The known facts do not yet prove motive. That matters. If the suspect was simply armed, unstable, criminal, or fleeing because he had a weapon, that is one kind of story. If investigators later find planning, targeting, communications, foreign contacts, or a direct intention toward President Trump, that is a totally different story. Same location, same gunfire, very different market meaning. And that is really the part most people miss. Markets do not just react to the headline, they react to the category of risk. Domestic crime is one category, political violence is another, an attack on leadership is another. Foreign involvement is another level entirely. So when people ask, will this move gold and silver? The answer is not yes or no. The answer is, what does the investigation reveal? Let me show you what I mean. Vice President J.D. Vance's motorcade had reportedly passed through the area shortly before the incident, and President Trump was at the White House while a business event continued inside. That sounds dramatic, and it is dramatic, but it still does not automatically prove the motorcade or the president was the target. One public report specifically noted there was no indication the motorcade itself was targeted. So we need to hold two ideas at the same time. It was close enough to matter, but not confirmed enough to overstate. That is not weakness. That is good analysis. Now, does the location matter? Yes. Of course it does. The area around the White House, the National Mall, and major federal landmarks is not just another city block. It is a zone where symbolism, security, media attention, and government continuity all overlap. If gunfire happens there, even if the final motive turns out to be unrelated, the event still creates a confidence question. How fast was the threat noticed? How fast did officers respond? Was the public kept away? Were officials protected? Did the system bend, or did it hold? From what has been reported so far, surveillance personnel noticed the individual because of what appeared to be a firearm. Officers moved in, the suspect fled, the suspect fired. Officers returned fire. The White House was briefly locked down, journalists were moved inside, and roads around the area were closed while investigators worked. That is not nothing, but it also sounds like the protective system identified the threat and contained it quickly. So if somebody says, this proves security failed, I would be careful. Maybe there will be failures found later. Maybe procedures will be reviewed. But based on the basic timeline, the threat did not appear to reach the White House grounds, the president's event continued, and the situation was contained. That is an important counterpoint. However, and this is the part that could matter for markets, perception can move faster than facts. If people see gunfire near the White House, a child injured, Secret Service returning fire, and a motorcade connection in the same news cycle, they do not calmly wait for a government report. They feel instability. They feel political risk. They feel that the center of power is under strain. And whether that feeling is fully justified or not, markets sometimes trade the feeling first. Gold understands that feeling. It has understood that feeling for thousands of years. But silver is a little trickier. Gold is cleaner as a safe haven asset. Silver has that monetary side, but it also has industrial demand, manufacturing demand, solar demand, electronics demand, and liquidity issues. So if a scary headline hits and gold catches a bid while silver hesitates, that does not mean silver is broken. It means silver is being pulled between fear and growth at the same time. Based on recently published numbers, gold demand has not been driven only by ordinary buyers. Central banks have continued to buy gold in meaningful size, while the total value of quarterly demand recently reached a record level because prices were so elevated. That tells you large institutional and official buyers are still treating gold as a reserve asset and a hedge against uncertainty. And according to recent silver industry updates, silver is still expected to remain in deficit again this year, with tightness in physical supply, geopolitical uncertainty, and policy questions all playing into the background. That is important because silver does not need every headline to be bullish. It already has a structural story. The headline only adds another layer. Now here is where I want to challenge the obvious take. A lot of people assume that if there is political violence, metals must immediately go up. But that is not always how it works. Sometimes fear pushes money into the dollar first. Sometimes higher energy prices keep inflation pressure alive, and that keeps interest rate expectations tighter, which can pressure gold in the short term. Recent market reporting showed gold falling even while Middle East risk was high, because the dollar and rate concerns were doing the heavy lifting. So if gold or silver do not instantly explode higher after this kind of story, don't assume the market is blind. The market may be sorting through competing forces. Fear helps metals. A stronger dollar can hurt them. Higher real rates can hurt them. Panic selling can hurt them. Long-term distrust can help them. All of these can happen in the same week, and that is why the first move is often the least useful move. The first move is emotion. The second move is analysis. If metals drop first, then stabilize, and buyers step in, that tells you something. If metals spike first, then give it all back, that tells you something else. You have to watch the follow-through. Now let's talk about the foreign actor question, because this is where the situation could change completely. Right now, there is no confirmed public evidence that a foreign government directed this incident, so we should not say that. But if investigators eventually found any connection to a hostile outside actor, especially during a period of elevated tension involving Iran and the Middle East, then this would no longer be just a security incident. It would become a geopolitical shock, and geopolitical shocks are different. They can move oil, they can move the dollar, they can move bonds, they can move gold. They can also hit stocks if investors begin pricing a wider conflict or a deeper political crisis. That is why motive matters so much. The gunfire is the event. The motive is the market multiplier. From recent market updates, the Federal Reserve is already dealing with a messy mix of inflation pressure, energy risk, and uncertainty. One senior Fed official recently described policy as positioned for risks, but also acknowledged that the outlook remains complicated by war-related supply disruptions and energy prices. So when another political security headline appears, it lands on a market that is already tense. It does not land in a calm room. That is why I do not dismiss it. But I also do not want to exaggerate it. There is a middle path here. The middle path says, this was serious, the motive is unknown, the system responded, the investigation matters, and gold and silver traders should watch the next details rather than trade the first rumor. If you're successful, share your success story in the comments so others can stay motivated. Markets are hard enough without people panicking every time a headline hits. Sometimes hearing from someone who stayed patient helps more than another price prediction. There is another angle here that is worth thinking about, and it has nothing to do with guessing the suspect's motive. It has to do with how investors process repeated shocks. One isolated event can be dismissed. A second one makes people uncomfortable. After several events, even if they are not connected, the market starts asking whether the background level of risk has changed. That is not conspiracy thinking. That is how risk models work in the real world. They do not only measure confirmed outcomes. They measure probability, vulnerability, and potential damage. So when people talk about previous security scares, the important question is not whether each event moved gold by a huge amount on the same day. The better question is whether these events are slowly changing how investors think about the United States as a stable political environment. That is a much deeper question. Gold does not always move because of one dramatic moment. Sometimes it moves because confidence gets chipped away, one headline at a time. And this is where history helps. In past periods of political uncertainty, gold did not always respond perfectly on day one. Sometimes it sold off with everything else. Sometimes it rallied immediately. Sometimes it waited until bond yields, currency markets, and central bank expectations moved first. So the clean lesson is not political fear equals instant gold rally. The cleaner lesson is political fear can increase the value of insurance when investors believe the risk will last. Silver's historical pattern is even messier. In a pure panic, silver can get hit because traders treat it like a risk asset. But when the panic turns into longer-term distrust of currency, debt, or supply chains, silver can become attractive again. That is why I keep saying the second reaction matters. The first reaction tells you who panicked. The second reaction tells you who believed the story. Also remember that metals are not the only assets watching this very carefully now. Bond traders are watching whether the government looks stable. Currency traders are watching whether fear strengthens the dollar. Energy traders are watching whether any geopolitical angle appears. Equity traders are watching whether political uncertainty damages confidence. Metals sit in the middle of all of that. They are not separate from the system. They are a mirror held up to it. So, what are the things to watch next? First, watch whether authorities identify a motive. Second, watch whether the suspect had any connection to political groups, foreign actors, or prior threats. Third, watch whether officials say the president, vice president, motorcade, or White House was actually targeted. Fourth, watch the market reaction after the first wave of headlines fades. That is where the cleaner signal usually appears. And please, do not confuse possible with proven. Could this eventually be discussed as another attempt? It is possible. Could it turn out to be unrelated to President Trump entirely? Also possible. Could it still matter for markets even if it was unrelated? Yes, because markets care about instability, not just legal labels. That is the key. Investors do not need a confirmed assassination attempt to start thinking about political risk. They only need enough reminders that the environment is fragile. And right now, between domestic tension, geopolitical tension, inflation pressure, energy risk, and questions around policy, the environment already feels fragile. This is why gold remains relevant. Not because every scary headline guarantees a rally, but because gold sits at the intersection of fear, trust, currency risk, and institutional confidence. When people trust the system, gold can look boring. When people start questioning the system, gold suddenly looks like insurance. Silver, again, is more emotional. It can move harder, both directions. It can frustrate people. It can lag gold, then suddenly outperform. It can act like money one day and a factory input the next. But if supply remains tight and investment demand stays alive, silver does not need a perfect world to perform. It only needs enough pressure building beneath the surface. So putting this all together, I would not call this confirmed. I would not call it harmless either. I would call it a developing security incident with potential market implications, depending on motive, official findings, and whether the public reads it as part of a larger pattern. That may not be as flashy as saying everything is about to explode, but it is closer to reality. And honestly, that is how you should approach metals right now. Do not root for chaos. You do not want the country unstable just so your gold or silver stack goes up. That is backwards. The ideal outcome is not crisis. The ideal outcome is fair repricing, functioning markets, and enough discipline that you are prepared without needing the world to break. So watch the investigation. Watch the dollar. Watch rates. Watch oil. Watch whether gold holds strength after the emotional reaction. Watch whether silver confirms or refuses to confirm. And above all, watch your own reaction. If a headline makes you want to make a financial decision in the first 5 minutes, step back. That is usually not analysis. That is adrenaline. Thank you guys for watching. Subscribe if you want more calm precious metals analysis without the noise. And drop your thoughts in the comments. Was this just a contained security incident, or do you think markets will start pricing political risk more aggressively from here? And remember, this is for education and market perspective only. I'm not your financial advisor, and I'm not telling you to buy, sell, or hold anything. I'm walking through the facts, the uncertainty, and the possible market paths so you can think clearly and make your own decisions with a cooler head.